Welcome back, everyone. The clock is ticking right there. 331 plus hours, or simplified, we are in day 14 of the government shutdown, as you can see right there by this clock, counting it down to the seconds. Today, a new sense of urgency to bring the shutdown to an end. In 3 days, the U.S. is expected to run out of money to pay its bills. Today, President Obama postponed a meeting with congressional leaders amid optimism from Republicans and Democrats who believe they are closer to an agreement. It's not clear when that meeting will take place, but the last time the president met with them, it was back on October 2nd. Despite the ticking clock on the debt ceiling deadline, Wall Street appears to be on the up and up. The Dow Jones alone was up 64 points, but that could soon change.
We stand a good chance of defaulting, and defaulting would have a potentially devastating effect on our economy, sending interest rates shooting up. People, whether Social Security recipients or people with disabilities or small business people who are vendors to government, not getting paid on time. We've already had a damaging effect on our economy because of the shutdown. That damage would be greatly magnified if we don't make sure that the government's paying its bills, and that has to be decided this week.
So if the default does happen, we want to make sure you are prepared. We have two financial insiders right here in our studio. David Daughtry is with Copperwind Financial and has more than 30 years of experience in the investment, financial services, and real estate industries. Dana Anspach is the author of Control Your Retirement Destiny and the founder for investment advisory firm Sensible Money. Now for more advice on bonds and whether or not to buy gold, here's Scott with Dana Anspach. Scott?
Tram, thanks for that, and I'll begin with the question that Tram asked David. So, Dana, what's your take for investors who need to protect themselves overall?
You know, basically, I tell people right now, you need to pretend like you're on a 3-month African safari.
Okay.
You've gone away. If you didn't know all this was happening, you'd come back, and you'd probably never know the difference. Okay.
So basically what David said, relax a little bit.
Yep, exactly.
All right. So we're not going to hyperventilate here this afternoon on EVB Live. You focus more on the 50-plus crowd, some folks who are, you know, maybe a decade or so away and transitioning into those retirement years. When it comes to the bond market for those folks, what do you recommend?
You know, that's an interesting question because people lump the bond market all together, and that's composed of both bond funds, where your money's pooled with everyone else's, and individual bonds that have a known value when they mature. So as people get closer to retirement, I like to match up their cash flows when they're going to need to use their money and match up a bond or a CD that matures. And that's a way to protect your principal value that a pooled investment like a bond fund doesn't offer.
Okay, what about international bond funds? Same thing?
A little bit different. For people that are younger and still farther away from retirement, I think international bond funds make a great diversifier. For people who are closer to retirement, I prefer that they own individual bonds or CDs that are going to mature. All
right, got to ask you about this. We see and hear the ads on talk radio, also on cable, about buying gold. Do you recommend to your clients to buy gold?
You know, here's the thing about gold. Unlike the companies that are behind a stock or a bond, gold doesn't produce a dividend, it doesn't pay interest, it doesn't produce a product, it doesn't deliver a service. So what are you really buying? Essentially, you're making a bet, you're making a trade, and you might get it right, you might get it wrong. So I don't think for most people, gold makes a really good part of their investment plan.
All right, so I started you off with a similar question that Tram asked David, and I'll end with a question that she asked him as well. What's your bottom line takeaway advice this afternoon?
You know, it's a great question. My bottom line and advice is for every 100 people that are giving market predictions right now, only one of them is going to be right. And we're not going to know till after the fact.
Just 1%? Really? Wow.
That's about it. You know, you shouldn't make your long-term investment plans based on whatever the latest market predictions.
Well, and I like what both you and David are saying, and that is, you know what, if you can't sleep at night, if you can't relax, make a move to where you can relax.
Yeah, that makes sense.
And just stay with the long course here for investing. Dana, thanks so much.
Thanks, Scott.
Tram, we'll send it over to you.